With air travel soaring, competition inside airports is also picking up. Ground handlers like SATS are fighting hard to get contracts. This week on Managing Asia, we check in with CEO Alex Hungate. The rain didn't dampen the spirit of Alex Hungate. The CEO showed me the action behind the scenes at SATS, Singapore's biggest airport ground handler and caterer.
You can see the driver now. It's a big piece of machinery, very powerful engine. So to have hands-free is very important. And he can check the ULD labeling, the augmented reality. So of all of these different ULDs which are on the runway, these are the ones which he knows are for his flight. So very quickly he can see them. Much safer, much more productive.
How long does it take to load up, usually, typically?
We turn the whole thing around in 30 minutes now. It used to take a bit longer, so this is a good improvement. Just two main doors. It's the same main deck loader will service both. If it's an A380, you can talk about 5 doors, and you've got 2 main deck loaders working.
So these are your people, and from your glasses, you can see all this through your glasses, and you would be able to load everything in.
Yeah, and the control room as well can also see, which is great.
Breaking out of the box, Hungate hacked the status quo by loading SATS up with the latest tech, like smart glasses to speed up operations.
Well, you can see the vision here on the screens of what they're seeing through the glasses. As they view the ULDs on the runway, it will automatically, using color coding, tell them which ULDs are due for their flight and which ULDs they shouldn't touch and leave alone. This is very important because each one weighs different amounts. So our load control team is making sure the plane is balanced. If you put a heavy one in the place where a light one's meant to be, of course, that can be a safety issue. So this is a fail-safe method where this loading plan here...
And this is what you see on your glasses?
Yes. This loading plan here tells them where they need to place the next container. And that is scientifically the result of our load control team doing a weight and balance analysis of the plane.
So obviously it cuts down on paperwork, it cuts down on loading time?
Yes. Loading time is critical because sometimes if a connecting plane doesn't make it, the passenger load is different than what the original planner thought. So in this method, immediately the load control can adjust in real time and say, okay, this container, which would have been there, now needs to go one back to compensate for that. And this is all real time. In the old days, they would have to get a new piece of paper. They go back to control room, new piece of paper on the clipboard, and then start again.
He won CNBC's Asia Disruptor of the Year award in 2017. Recognized for his efforts in cracking the code.
Big data capabilities that are coming through.
By revamping a business that depended heavily on manual labor and paperwork. Hungate, a former banker who became CEO of SATS in 2014, is trying to revive the golden days of air travel.
The experience of travel has become less exciting and less glamorous, more mundane. And I think our vision is to help the industry to regain some of that glamour.
But the dogfight between service providers has become more intense, putting yields under pressure and driving SATS to rethink its operations. It now invests $90 million a year on new tech to boost productivity, including souping up its massive kitchen ops with tray assembly and cutlery sorting automation.
When you look at the numbers, actually, it's a pretty compelling case because we've got about 30–40% of our cost base is labor. And so if you look at wage inflation in the major cities in Asia, you're talking about potentially a 5% increase in that cost base every year, unless you do something differently. So that's where we started saying we have to do something differently because the price pressures in the aviation business in terms of their yield mean that it's very hard for us to pass on that kind of a price increase every year. Every year that 5% hits you, so you can't hang around. And also it gives you a competitive advantage. The faster you can move, creates an advantage over what your competitors can do.
And your shareholders understood that urgency?
Yeah, we spent a lot of time trying to tell them about that, but of course they could see prior to that the margins were in fact decreasing. So it was quite clear to them, I think, if you look at the 2012, 2013 pattern, decreasing margins, negative jaws, in other words, the cost rising faster than the revenues, And so there was an imperative from the shareholder perspective as well to do something different.
Well, the investment seems to be paying off. It had an impact on productivity gains. What sort of numbers are we talking about? Has it improved your margins, and how much has it impacted your bottom line?
Yeah, our margins were running as a group at about 9%. Now we're up around 13% just in a short space of 3-4 years. So when you look at that kind of a transformation in your margin, that allows you to really invest in the future. We could easily take that technology spend higher if we wanted. I'm somebody that sees so much opportunity in the new technologies coming on the pipeline that I don't see why we shouldn't do that.
What new technologies in the pipeline are you looking to introduce next?
Well, we're very focused on data, harnessing data. So you mentioned wearables earlier. I think the Internet of Things helps us to generate a lot of new data in real time. You look at the scale of the airport operations these days. You know, here in Changi, we're expecting to go from 60 million to 135 million in about 10 years. Many other airports like Beijing, Jakarta, etc. are also doubling and tripling in capacity in the same period. So what we're doing is we're digitizing everything. We're using the Internet of Things to be able to monitor in real time. And then our vision is to a digital control tower where every single movement in the airport is tracked, and therefore gives us the potential to optimize.
Well, given your success in adopting these new technologies, to what extent have you managed to reduce your dependence on labor?
We have a long-term goal to maintain our workforce at about the same size, even while the industry is doubling and tripling in terms of the volumes that it's handling. So here in Singapore, we have about 12,000 employees. In 2030, when Terminal 5 opens and we're shooting for 135 million passenger throughput, we still hope to have around 12,000 employees. So the implied productivity gain is a doubling in productivity in that period.
You earlier mentioned 30% of your costs mostly comes from labor. To what extent could you reduce that in future?
Yeah, I think the revenues can continue to grow and the costs should also grow, but probably no more than in line with revenue. So I fully expect that we'll pay our people more. I think that's right. As our people become more productive, they embrace technology. I want to pay them more. And I tell the unions this too. I want to pay them more. But we have to obviously generate the productivity improvements to be able to do that. If I can pay them more, I can get the more talented people. I can also get the people who are most passionate about service. And their experience will help, because still in airports there are unexpected things that happen. And you need that experience of the human touch, the experience to be able to improvise at the right moments.
And you're getting the full cooperation from the unions?
Yes, our unions have been great actually. I mean, they are helping us with observations about how we can improve. Most of the good ideas actually come from the people who actually perform the tasks, not from some PhDs sitting in a dark office in headquarters. So our cultural change has been a lot about encouraging people at all levels of the organization to come forward with ideas and be brave enough to embrace the change as well. You know, there's a lot of courage involved in change, and I think people at all levels of the organization are showing that courage and are being prepared to step forward and say, hey, I have an idea.
Does it bump into you?
No, okay, you see.
Meet Dolly, or that's what they call this automated guided vehicle at SATS, a robotic cart that delivers food to airport loungers using sensors and follow-me technology.
The biggest transformation that we've had is in the culture. You know, if you're running an airport or an airport operation, you tend to have to focus on operational excellence. It makes sense. But the flip side of that great cultural attribute, operational excellence, is of course risk aversion, because people who focus on operational excellence like to do the same thing day after day, maybe slightly different, slightly better, but they don't like to radically transform, step change process. So we've had to take more risk. We've had to try new things, even though we know that not all of them can be successful on day one. And then, like a lot of companies in Silicon Valley, you know, you put something out, you try it, you realize that it can be improved, and then you improve it. But as long as you keep going rapidly, I think you can make fast progress.
Let's look at some numbers, because food and catering services contribute about 55% of your overall revenues, whereas gateway or ground handling services make up about 45%. Now, airlines have been cutting services because of yield pressures, and that's impacted your food revenues. What's the situation like now? What are you doing to mitigate the impact?
Yeah, I think as the aviation business goes through cycles, they tend to cut back in the downturn, and then they want to differentiate themselves, and so they add back when things go up. We're currently in a downturn where airline yields are highly compressed, and then they have been making trade-offs in terms of their services. Sometimes that results in a reduction in food expenditure. So what we've been doing is we're trying to use our productivity and our scale advantage, because we're the biggest player across Asia, to become more productive and to help work with them to jointly save costs without having a big impact on the customer experience, and that's key. So it's really a marketing exercise as well as a partnership exercise.
When it comes to cutting costs, do you actually advise the airlines what to cut back on and what not to cut back on?
Well, we do know a lot about aviation catering. So yes, part of our transformation is to go to the airlines with new suggestions, creative suggestions about what we can do that will have minimum impact on the customer experience, but can nonetheless help them save money behind the scenes. Yeah.
You control about 80% of Singapore's Changi Airport's ground handling operations. There's been a fierce battle between you and rival Donata when it comes to contracts for airlines, and that's dragged down rates. As the bigger player, is competition all about driving volumes? Is it all about playing the volumes game?
Well, I think just as the new aviation model from airlines is not just about the ticket revenue, they've started to diversify their revenue streams. In the case of SATS, we're also starting to diversify our revenue streams, partnering with the airlines to do so. So now we have a joint venture that does buy on board duty free. We're into the buy on board food market as well. We've built a large e-commerce sortation site next to our cargo facilities in the airport. So all of these are examples of how we are moving into adjacent revenue streams which relate to our core business and help us to generate more revenue from the same volume. And that's very similar to some of the successful recipes you see with the fast-growing airlines as well.
But nonetheless, rates have been falling. Where are rates now?
Yeah, I think in most industries, over time, as the industry matures, you see some pressure on pricing in the core part of that. But the successful companies constantly reinvent, add services so that they escape out of that cycle of falling revenues. And that's what we do too.
Well, SATS is listed on the Singapore Stock Exchange. Singapore investment firm Temasek is a major shareholder, owning about 39% of the company. How do you expect to do this financial year, given the intense competition and the uncertainty in the global economy?
Yeah, the competition has been there, and we've managed to outrun it with some of the productivity improvements that we've been making. I think now the investors are looking to see what we can generate outside of Singapore. If you look at the last quarter, the beat on the expectation was related to the contribution from overseas subsidiaries and associates.
We're talking about non-aviation business?
Some of it's non-aviation. So we've launched a big growth strategy in China, servicing the fast-growing food service industry there. But also our overseas aviation investments, whether that be ground handling or aviation food, are starting to return well for us. So the big markets like China, India, Indonesia are actually growing faster than Singapore even in terms of aviation. So the investments that we've been making over the last several years now are starting to bring back quite attractive returns to shareholders here.
Right now, the majority of your revenue and your profits are generated here in Singapore. Where do you see overseas revenue in the next few years?
Well, I think the majority should be from overseas, for sure, meaning more than 50% should be from overseas in the future.
Don't go away, more with Alex Hungate, CEO of SATS, in just a moment. How tough is it to break into these international markets in an industry known traditionally to be very monopolistic?
The industry is highly regulated.
Managing Asia, we'll be right back. Hi, I'm Christine Tan, and thanks for watching Managing Asia on CNBC Live. You can check out more of our great content by clicking on the videos on screen. And don't forget to subscribe to our channel for the very best in feature programming. Thanks for watching.